I promised you guys to do an update on the stock BMY, which is Bristol Myers. This is, I believe, one of the most undervalued stocks in the stock market. It's now trading at a 17% free cash flow yield, buying back stock, paying like a 4.7% dividend. And it's a pretty good company in general. And the stock keeps going down. And if you notice lately, I've been talking a little bit more about pharmaceuticals, even though this is not something that I specialize in, but I've been studying it recently and studying a lot of these companies, the pipelines and everything, because I see a massive opportunity in this market. When you have most stocks, they are rallying and they are going up, and my stocks are going up too, but I always have some cash. I like to buy stocks, sometimes, buy them and sell them, turn around kind of plans, or do certain things with my cash position. And I'm seeing an opportunity with pharmaceuticals, mainly Pfizer and BMY Bristol Myers. Now, as you could see in this chart, the market is loving NVO and Eli Lilly, mainly because of the weight loss drug and many other things. But they don't really love Pfizer or Bristol Myers. Now, many of you will tell me that yes, the market loves them because they have this amazing product and with a patent that expires in 2031 for the Ozempic and many other things. Well, yes, they have it right now, but they didn't have it before. They did not have it before they made this massive move. And this is a symmetry that I see with Pfizer and Bristol Myers, especially Pfizer, because you have the legacy business that's spitting out free cash flow, and they use the free cash flow to acquire more companies, to do speculative bets in research and development. And you have Pfizer is working on a lot of things for cancer. Bristol Myers is working on a lot of things for Alzheimer's. So maybe in a few years from now, you could have a potential of some kind of a product, kind of like Ozempic, but from Pfizer or BMY in a totally different sector that could cause this massive spike, 300-400%, like we've seen on NVO and Eli Lilly. But if this doesn't happen, then you still have the legacy business spitting out free cash flow, like for Pfizer, over around a 6.2% dividend, and the free cash flow will likely grow into the future. Same thing with BMY, 70% free cash flow yield. So this is what I'm seeing. I'm seeing a low risk, high return kind of potential for these two stocks. And this is why I'm getting very interested for them. It's more of an asymmetrical bet. Now, in terms of Bristol Myers, they did good on earnings. The stock is still going down, but it did good on earnings. EPS, $1.70 versus $1.53. Over 9% growth, $4.3 billion in cash flow generation in just in the fourth quarter alone, and low single-digit increase in revenue for 2024, which I believe is fair. Now, you might be asking yourself, why is Bristol Myers going down so much? Why is it trading at a 17% free cash flow yield? I mean, why is the sentiment so bad? And this is mainly because they have their two drugs. These two drugs, they generate most of their revenues from these drugs. I mean, they generate pretty close to 5 billion combined. And these two drugs, they have patents that expire in 2028. The first one expires in April 1st of 2028. The second one expires in 2027 and in the EU around 2026. But they might be eligible for some kind of a patent term extension. Sometimes these companies can pull it off, but if they don't pull it off, they expires between 2027 to 2028. And the market is freaking out that maybe Bristol Myers will not be able to replace these drugs from now till 2028. And this is why the market is very negative. Another reason why the market is negative is because you have the Biden administration. They're trying to negotiate the price of drugs, and they have a list of the prices of drugs, or the drugs that they want to negotiate the price on. And the first one is a drug that Bristol Myers owns, and I believe Pfizer and Bristol Myers, they own this drug together. So this is another reason why. But in terms of this quarter, Bristol Myers is still proving everyone wrong, because the growth portfolio, which is the new categories of drugs that are supposed to replace the legacy drugs when the patent expire, they have been performing well. If you look at the growth, the legacy business declined from 29.4 to 25.6, which is normal. This is what normally happens with pharmaceuticals. But the growth portfolio went from 16.8 to 19.4, and they recently spent, I believe, as like 23 billion or 21 billion in terms of acquisitions for the company. So they don't even reflect the recent acquisitions, and there's a lot of them, and they could do much more in the future. So this shows me that whatever Bristol Myers are trying to do is working, and it's going to take some time, but it's working. And I'm going to tell you another reason why I believe it will ultimately work for them to replace the drugs. And this is mainly because of the massive free cash flow that this company has. Again, over a 16%, 16.2% free cash flow yield. This is from yesterday. For today, it went down another 1.5%. It's pretty close to 17%. Now, the good thing is the company is buying back stock. So they are taking advantage of this opportunity to buy back stock. This is something good. It will ultimately create value for shareholders. So they're buying, I believe, in total, it's like 3.2% of the market cap year on year, which is amazing so far. They do have a little bit of debt. It's around $27 billion of net debt. And this is where a lot of people are freaking out. They told me, oh, but there's so much debt for Bristol Myers, $27 billion of debt. Well, the way I look at it, I look at if they can even pay it off. And in terms of the dividend, their dividend is $4.6 billion for 2022. We can round it out to $5 billion. Let's say $5 billion for 2024 in terms of the dividend. Well, the free cash flow for 2024 is expected to be $16 billion. So they're going to have $11 billion after paying the dividend for them to pay down the debt, to do acquisitions, and they will likely have this $11 billion from 2024 to 2027. So over the next 4 years. And for $11 billion, this is pretty close to around $44 billion. So for $44 billion over the next 4 years, do you really want me to believe that Bristol Myers cannot replace the legacy drugs that they're going to expire in 2028? I personally just don't believe it. They have the resources, they have the management team. This is what the company does. It's more of a pipeline company. They keep doing new stuff, and they've done it before, and I think they can do it again. And they have the resources to do it. And if they do want to pay down the debt is $35 billion, they can pay it off in like 3 years, which is not bad at all. Or they can leave the debt, pay it down a little bit and then use it to do even more acquisition for them to replace the drugs. So the way I see it, I don't really agree with the market. I think there's a massive overreaction, more of a panic kind of setup on Bristol Myers, and it keeps selling off and it keeps going lower. There's also no catalyst for the stock to go up. And you have the preference from investors that are preferring risk-on investments, kind of AI stuff like NVIDIA, Palantir, and tech stocks, Amazon, and many others. And they are not really going for safety or for, safer, lower growth investments like the pharmaceutical stocks, except, of course, Lilly and NVO. So this is another reason why Pfizer and Bristol Myers have been coming down. But I think this is just a massive reaction over Bristol Myers. And they have been proving everyone wrong, and the new portfolio is performing and is growing, and they are going to have around $44 billion of extra free cash flow over the next 4 years before the patent expire for them to do acquisitions, and they can borrow and even do more acquisition if they needed to, and still maintain the 4.4% dividend and still do buybacks if they wanted to. So for me, Bristol Myers, it's just getting too cheap to ignore. And I have to be honest, I think it would likely go lower because, again, there's no catalyst, there's nothing, unless it's just bottoms because it's too cheap. But even with a good earnings report, and the guidance was not too bad for 2024. If we look at the guidance, low single-digit increase, total revenue low single digits, 710 to 740, which is cheap on an EPS basis. So the guidance wasn't too bad. The new portfolio is performing, and Bristol Myers is still going down. So I'm not sure what's going to rally the stock, but I do believe it's undervalued. And personally, I'm just letting you know, I'm most likely end up buying Pfizer and Bristol Myers both. I mean, I just see a massive asymmetrical bet potential, and I think I'm eventually going to do something about it. I keep studying these companies and keep learning on them. So this was not financial advice. It was just my opinion on Bristol Myers. Thank you for watching the video. I hope you enjoyed it. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.